Picture this, a balloon inflating, growing larger and larger until, pop, it bursts. Now imagine this happening in the world of finance. Welcome to the intriguing world of financial market bubbles. These bubbles, much like their soapy counterparts, start small. A new asset, a promising venture, or a groundbreaking innovation catches the market's eye. Money flows in, the value inflates. But here's the catch, just like a balloon, there's a limit to how much a financial bubble can inflate. Intriguingly, these bubbles are as unpredictable as they are inevitable. Their growth is often fueled by speculation, optimism, and the human tendency to follow the herd. And when they burst, the aftermath can range from minor market corrections to full-blown financial crises. The danger lies not just in their burst, but also in their unpredictability. Can we spot them? Can we prevent them? Or are we helpless spectators in their path of potential destruction? So what makes these financial bubbles inflate and burst? Let's delve deeper. A financial bubble starts with a whisper of a new investment opportunity, a new market trend, or a groundbreaking innovation. It's like a spark that sets a wild inferno ablaze. This whisper starts to circulate, stirring up investor interest. Excitement builds, the whispers get louder, and the once small spark now turns into a roaring fire. Investors start to pour their money into this new, promising venture, driving up the asset prices. The market becomes exuberant, brimming with positivity and high expectations. This is where the herd mentality kicks in. Encouraged by the success stories of early investors, others start to join in. They all want a piece of the pie. The fear of missing out on this golden opportunity fuels the fire even more, inflating the bubble further. What happens next, you ask? Well, the plot thickens. As the whisper turns into a roar, more and more investors jump on the bandwagon. Prices inflate, the bubble grows. Now let's take a moment to delve into the inflation phase of a financial bubble. This is the point where optimism turns into euphoria, where asset prices skyrocket, and where speculative trading becomes the name of the game. Imagine a lively marketplace buzzing with traders. They're all fixated on one thing, the rising asset price. It's like a magnet, pulling in everyone around it. The more people buy, the higher the price goes. It's a self-fulfilling prophecy, a vicious cycle. The market is ablaze with exuberance, and the bubble inflates. But wait, the plot thickens. You see, this growth, as electrifying as it may be, is unsustainable. It's built on speculation, not fundamental value. And when reality catches up, the bubble can't stand the pressure. Like a balloon stretched beyond its limits, the bubble bursts. This is the moment where the music stops. The asset price, once soaring high, takes a nosedive. The market, once ablaze with euphoria, is now gripped with panic. Investors scramble to sell, but it's too late. The damage is done, the bubble has burst, and the fallout is catastrophic. Just like a balloon, a financial bubble isn't built to last forever. Eventually it pops. The inflated prices come crashing down, leaving a trail of financial wreckage in their wake. But as we'll see in the next scene, this isn't the end of the story. It's just the beginning. The aftermath of a burst bubble is not a pretty sight. The market crashes, investors panic, and the economy takes a hit. Quite the spectacle, isn't it? But as they say, with great risk comes great reward, and the world of finance is no stranger to this adage. When a financial bubble bursts, it sends shockwaves through the market. Prices plummet, stocks free fall, and the once vibrant market landscape suddenly looks like a ghost town. Investors, both large and small, suffer losses, their dreams of financial success shattered in an instant. And the economy? It takes a nosedive. Unemployment rates surge, businesses shutter, and a recession looms large. But it's not all doom and gloom. Remember, every cloud has a silver lining. The burst also serves as a wake-up call, a stark reminder of the perils of reckless investment and unchecked speculation. It forces us to reevaluate our strategies, to learn from our mistakes, to build a more resilient and sustainable financial ecosystem. Understanding and identifying these bubbles can help us navigate the turbulent waters of the financial sea. It can help us mitigate their effects, lessen their impact, and perhaps even prevent them from forming in the first place. In the world of finance, bubbles are a fascinating, if dangerous, phenomenon. Remember, it pays to keep your ear to the ground and your eyes on the horizon.